Hello, good morning. You're watching Market Cafe on ET Now with me, Vinny Motiwala. Along with me is Ankita Saxena as well. Ankita, very good morning to you today. Obviously, a lot of earnings coming in for the D Street, weekly expiry as well. But what's the handover from the US market this morning?
So good morning to you, Vinny, and good morning, everyone. So Vinny, the banking crisis don't seem to be abating anytime soon for the US markets. At least they really weighed down the Dow Jones average yesterday. So yesterday, the US bank regulators were considering downgrading their assessment of the First Republic, which could hinder the bank's ability to borrow from the Federal Reserve. And the US bank regulators were, are really mulling over the fact that whether they should be really downgrading the bank. And this could really weigh down the fact that, the Federal Reserve's borrowing capacity from the Federal Reserve, and this wasn't taken very well by the markets. The Dow Jones Industrial Average lost more than 200 points as investors are really worried over the First Republic overshadowing their excitement about the big tech earnings that were really aiding the market. Dow declined 228 points after trading up for more than 100 points earlier in the session. The S&P 500 slid 0.3%, and the tech-heavy Nasdaq composite added 0.4%, trimming earlier gains after jumping as much as 1.4% in the trading session, mainly aided by the tech stocks that have been reporting their earnings. Like we saw Microsoft, we saw Alphabet that reported very strong quarter earnings, and of course we had Meta also that reported its numbers yesterday. Jumped almost 12% in extended trading after the company reported an unexpected increase in sales for the first quarter and issued better than expected guidance for the current period. Now let's look at the European market. The European stock markets closed lower as concerns resurfaced over the health of the global banking sector. The Pan-European Stock 600 index closed at 0.8% lower. DAX was down 0.4%, and FTSE was also down 0.4%. CSE down 0.8% in trade. So a negative handover coming in there, Vinny, except for Nasdaq, of course, which was aided by strong tech earnings.
Absolutely, Ankita. Obviously the Dow Jones was down, but we also saw some pressure coming in on the oil prices as well. When they look at the Brent crude oil prices, they are trading below that at $80 per barrel mark. Right now, also it's at $77.9 per barrel mark. Overnight, there was a sharp downfall that we saw coming in and a sharp downtick that was coming in for the Brent crude oil prices. They are the lowest levels that we've seen since almost the end of the month of March as well. And what was a concern is obviously in terms of the fears about US recession, increased Russian oil exports, dulling the impact of the OPEC production cuts. Because of that, Russian oil exports coming in over there, and that is a factor. That is why we're seeing slight bit of an uptick coming in the crude oil prices this morning. But heavy losses that we saw coming in for the crude oil prices overnight as well. And this uptick is actually only supported by after a sharp drop of almost 4% that we saw last night, overnight, and sharp losses mainly due to the US crude oil inventories, which fell more than that was expected in terms of that. That was a big concern coming in over there, while that was overshadowed by the growing concerns of the recession fears. So yes, there are some positives, there are some cons. As of now, this morning, the pros are weighing more on the Brent crude oil prices than the cons, but do not forget that we've seen a sharp fall of 4% already in the crude oil prices. Trading below the $80 per barrel mark is Brent crude oil price.
All right, then, Vinny, let's quickly go across and check what are the events that we need to keep a track of as of today. As we all know that we are in the thick of the earnings season now, and in India we have Wipro, Axis Bank, Bajaj Finserv, Tech Mahindra and HUL, the sector that you track very closely, Vinny, that will be reporting its number, and we will be bringing you all the action from the earnings corner. Of course, the IPO action, Mankind Pharma today is the last day to subscribe to the IPO. And in corporate action, we have the weekly expiry. We also have the initial jobless claims coming in from US. We also have the US GDP data. We have Eurozone consumer confidence number that will be coming out today, and we will keep an eye out for that. And in terms of global earnings, we have Amazon, Intel, MasterCard, Hershey's, Honeywell, Barclays, Samsung and Deutsche Bank that will be reporting their quarter numbers as of today.
Absolutely, Ankita. But obviously, when you ended with the numbers, I'm going to start with the numbers that were reported. You did touch upon that as well. That shares of Facebook parent Meta actually zoomed after the company surprised the street with an increase in terms of the sales for the first quarter, largely led by their Realty Labs unit, which brought in $339 million. The sales were up by 3% following their third consecutive period of revenue decline. A better than expected revenue guidance issued by the company anywhere between 29.5 to $32 billion.
And Samsung's profits plunged in quarter one amid weak demand for memory chips. The forecasting a massive slump in profits earlier this month, company said it would be making a meaningful cut in the memory chip production. They have, however, gone ahead to flag a recovery in chip over the second of the fiscal. Profits fell to $478 million in the quarter gone by. That's a 95% drop and the lowest for any given quarter in 14 years.
And in a big blow to the tech giant Microsoft, the UK regulator has blocked the company's latest acquisition of video game publisher Activision Blizzard. And this actually came amid the company's vigorous efforts to convince authorities about the benefits of the deal. And the company has said that it would contest the decision. Microsoft's shares tanked as much as 8%, reversing the gaining trend that they saw on the back of their Q1 numbers.
A new Bank of Japan chief chairs first Kazuo Ueda policy meeting. Ueda is expected to maintain the ultra-loose monetary policy of predecessors Haruhiko Kuroda for now, but expectations are that he will plot a path out of his policy in the future.
And talking about layoffs that have continued across a lot of companies, Amazon.com has started laying off employees from its cloud service operations amid slowing sales growth. The US, Canada, and Costa Rica employee base were notified about the layoffs over emails. The company just wrapped up a round of job cuts earlier this year that totaled about 18,000 workers. Amazon announced another 9,000 layoffs in March as well.
And tracking news flow on US debt ceiling now, Rao, the US House of Representatives have passed a bill to raise the government's $31.4 trillion debt ceiling, including spending cuts over the next decade. The mostly partisan 217 to 215 vote was a win for Republican House Speaker Kevin McCarthy, who hopes to lure Biden into negotiations on cutting spending despite White House and congressional Democrats insisting on a debt limit increase.
And some update coming in on the Russia-Ukraine war. Now, Ukrainian President Volodymyr Zelensky spoke to his Chinese counterpart Xi Jinping via a phone call, a first since the war struck Ukraine in 2022. The call was quote-unquote long and meaningful and might be able to be encouraging in terms of better ties between Beijing as well as Kyiv. And according to the media reports, China is set to send representatives to the war-struck nation to hold dialogues to resolve the crisis there. The visit will also include efforts towards a ceasefire as well. And we also spoke to Anil Tiruganayata, former ambassador. Here, let's go across and listen in to the excerpt of this conversation.
I think that what the Chinese ambassador in France talked about the sovereignty issue and other things with regard to the erstwhile Soviet republics, including Ukraine. Their foreign office has decried it and said that this was incorrect in a way, and the ambassador's personal views, which very rarely happens. And I think immediately thereafter, this call has been put through. And so just to avoid any trust deficit. So I think that the Chinese are counting on the vulnerabilities of both Russia as well as Ukraine, that somehow this can work to their advantage, and they are seen once again as the global peacemaker in that sense. So China is looking to play that role very significantly. Of course, as far as USA is concerned, the USA would not like China to take that kind of an advantage globally in that sense. But at the same time, as we have seen that the Americans openly have said that China should not help Russia by arms and other things, but at the same time, they would not mind any effort being made by the Chinese. French president was there in China along with the European, and they said that only China can bring about some kind of a peace deal or some kind of a ceasefire between Russia and Ukraine. So I think the Europeans and possibly the Americans are perhaps on different page as far as this Chinese initiative is concerned.
And the craze for sports utility vehicles or SUVs is in Indian market is well known, and the majority of new launches in the auto market are in this category. However, small cars still dominate the top-selling vehicles list, with Maruti Suzuki's two hatchbacks, Swift and WagonR, topping the list. Sumit Chaturvedi is here with more details. Over to you, Sumit.
For the car companies in India, 2022 was a remarkable year. Car market has recorded the highest ever sales, with companies selling around 3.9 million cars last fiscal. The breakup of sales chart shows that while Indian buyers are SUV lovers, the feature-rich hatchbacks are still not out of buyers' mind. The top-selling cars in India last month were two hatchbacks, the Swift and the WagonR. Taking pole position, Maruti Suzuki sold 17,559 units of Swift hatchback in March, making it the highest selling car in the market, followed by the WagonR that sold 17,305 units. The other two in that list were also Maruti Suzuki cars, with compact SUV Brezza selling 16,227 units, while hatchback Baleno sold 16,168 units last month. The only other automaker entering the top 5 chart was Tata Motors that sold 14,769 units of the Nexon in March. Among the 10 best-selling cars during the March month were 7 models from Maruti, 2 from Tata and 1 from Hyundai. Also, 5 of the 10 cars were sports utility vehicles, while the other 5 were hatchbacks or compact sedans. While the car market in India is still majorly divided between Maruti Suzuki and Hyundai, India's Tata Motors has increased their market share as well. Car makers Maruti, Hyundai and Tata Motors also posted their highest ever sales in FY23. The overall Indian passenger vehicle market has posted a 26.7% growth in March 2023 when compared to last year's numbers. But the biggest loser in the market continues to be sedans, with a majority of the buyers staying away from that segment.
On that note, we're going to slip into a very short break. Viewers, don't go anywhere. We'll be back with more news updates after the break. Welcome back, and you're watching Market Cafe on ET. Now it's that time that we actually look at what the Asian markets are doing to get more of an indication of how we could expect the D3 to open up as well. And given the cues from the global markets, Asian markets are not doing anything exciting as well. Look at the Hang Seng, just trading almost flattish with mild gains, mild positive bias there as well. Okay, Hang Seng actually is just down 0.15%. Moving on, let's talk about Shanghai as well. Shanghai too is not doing anything exciting. Just mild positive bias there coming in as well. So nothing exciting that we're seeing coming in from the Asian markets, given that, what has actually happened is that the new Bank of Japan chief is going to chair his first policy meeting as well. Now, when you look at Nikkei, that's why that's down almost 3/10 to 4/10% in trade as well. While when you look at Kospi, that also is down 3/10% in trade. So there's clear pressure that we're seeing on the Asian markets as well. And even ASX 200 trading with cuts of almost 0.5% in trade as well. So nothing exciting. SGX Nifty as of now is expected to see a bit of a muted start for the Indian markets. SGX Nifty is testing those 17,800 levels. But, we've not seen them surpass those levels. So it'll be interesting to see, will we actually perform better than the Asian markets, or will we be subdued in trade like the Asian markets as well? As of now, SGX Nifty down almost 0.20%. And with the US President Joe Biden announcing his re-election bid, the spotlight has actually shifted onto the age of the heads of the state across the world. My colleague Vikram Oza is here with an explainer whether age is actually just a number for the world leaders, or will it be more than a number? Let's take a look.
Time waits for no man, the saying goes. And for politicians across the world, this seems to be their life mantra. With US President Joe Biden now announcing his re-election bid, the spotlight is on the age of the heads of state across the world. So let's first look at US President Joe Biden. He entered office at the age of 78. He is the only US president to turn 80 while in office. His Republican counterpart Donald Trump is not far behind. At age 76, Trump is among the oldest world leaders, and if Trump runs successfully for president in 2024, he would become the second US president after Joe Biden to turn 80 while in office. But if you thought 80 is old, then hold your breath, because we haven't really talked about the oldest world leader yet. Paul Biya is the president of Cameroon since 1982, the oldest serving head of state at 90 years. In fact, he's also the second longest ruling president in the entire continent of Africa. And finally, we have the Russian president, Vladimir Putin. He is currently 70 years old. Putin became the president of Russia in 2000 and has now given the current changes to presidential term rules, Putin is set to spend more years in power and perhaps even challenge his rival Joe Biden. But not all heads of state are old and grey. In recent times, the world has seen the rise of several young heads. The youngest in this lot is Chile's president, Gabriel Boric. At age 37, he is not only the youngest president of Chile, but also the youngest head of government across the world. The next young blood on that list is from a lesser-known country in the southeastern Europe, and this is Dritan Abasovic, who at age 37 became the Prime Minister of Montenegro in 2022. Ukraine's President Volodymyr Zelensky is next on that list. Zelensky became the President of Ukraine in 2019, and at age 45, he is one of the youngest heads of state. And finally, we have the Canadian Prime Minister, Justin Trudeau. Trudeau became the Prime Minister of Canada in 2015 at age 51. He's relatively younger than most counterparts globally, and that's where we're looking at the oldest and the youngest lot when it comes to world leaders.
Well, all right, it's time for us to slip into a short break. Don't go anywhere. We go domestic after the break.
Had R.C. Bhargav, chairman of Maruti Suzuki, give us an insight on the numbers. What is it in terms of the margins, growth, profitability? What of this is actually sustainable? Let's go across and listen into the snippet.
Should this year grow, the SIAM estimate of industrial growth is between 5 and 7%. Let's take an average of 6%. I think Maruti, with all the new models, especially in the SUV segment that we have launched or will be launching, will do better than the expectation of industry. How much better, I can't say at this stage, but I'm reasonably confident that we will do better than 6 or 7%, which the industry is going to do. The result will be that we shall comfortably cross the 2 million mark, and how much further we go, I think largely will be determined by what the semiconductor industry does to help us produce more vehicles.
And well, moving on to another set of earnings, Bajaj Finance reported a jump in new loans booking in the past year, going up to over 29 million. My colleague Vamakshi joins in to share more details on this. Over to you, Vamakshi.
Well, absolutely, Ankita. Bajaj Finance, a good show of a good show as far as numbers are concerned for the fourth quarter. Let's break down the numbers for you. Net interest income came in at around 6,255 crores, which is slightly above what we were penciling in. Apart from that, when we look at the PPOP, that was, however, in line with estimates, coming at 5,119 crores, and this is an uptick of nearly 29% on a year-on-year basis. When we look at the provisions and write-offs, they stood at 859 crores. Again, this was slightly higher than what we were expecting, but PAT, that has seen a good uptick of nearly 31% on a year-on-year basis and stands at 3,158 crores, which is much better than what we were expecting. Apart from that, the asset quality for the counter has also improved. When we look at the GNPA, that has come in at 0.94%, and this in fact is the lowest level in the history of the company. NNPA stands at 0.34%. Apart from that, when we look at the core AUM growth, that has seen an uptick of 29%, and absolute AUM increase was the highest ever seen in quarter 4. Number of loan books also saw an uptick of 20%. Customer franchise stood at 69.14 million. Annualized ROA 5.4% in Q4 versus 5.3% that we saw last year. So slight bit of an improvement here. ROE has also seen a significant improvement of almost 100 basis points to 23.9%. Apart from that, the management also came out with a very good, strong commentary as far as FY24 is concerned. They have in fact given a growth guidance of nearly 28 to 29% for FY24, which is much higher than their medium-term guidance of 24 to 25%. They believe that the growth is expected to remain strong, but the focus will now be on the margin trajectory. They're expecting a moderation of nearly 40 to 50 basis points in FY24, assuming one more policy rate hike. In fact, this is the highest ever customer franchise addition, and they're expecting to add nearly 11 to 12 million of new customers in FY24. All products and services are now live on their web and app digital platforms. And in fact, we have a few brokerage notes that came in on Bajaj Finance, and they're highlighting that JP Morgan in fact is saying that the company has surprised positively on the margins. Asset quality continues to remain solid, while and this in turn justifies the valuation premium that the company has versus top private banks. Morgan Stanley says that the rates likely peaking should be a tailwind for the counter, and given all these positive factors, JP Morgan and Morgan Stanley both have maintained an overweight rating on Bajaj Finance. So overall, a good show from Bajaj Finance.
Overall, a good show from Bajaj Finance. Thank you so much for that update, Vamakshi. But let's listen in to what is the word coming in from the management on their Q4 numbers as well.
Gross NPA, it's the lowest ever in the history of the company. And if you adjust this to 180 days past due and so on and so forth, I think these numbers are ever low numbers. Net NPA came in at 34 basis points, ending March 23. Very quickly on full year, given that it's a fourth quarter, excellent year overall across all financial and portfolio metrics. We delivered core AUM growth of 55,292 crores. We had guided for 52 to 53,000 crores of AUM growth in the beginning of the year. We disbursed 29.6 million loans. We added 11.6 million new customers to the franchise. Highest ever customer addition that we've actually done. We are pretty confident about growth and portfolio metrics for FY24. App platform has fully gone digital across all products and services. It's going live in a staggered release manner.
And well, HDFC Life also announced its quarterly results yesterday with net profits missing the estimates at 362 crores. My colleague Harsh Saita comes in with more details. Over to you, Harsh.
Well, yes, we've seen good premium growth, and that's largely in line with what we were anticipating or penciling in. In fact, gross premium income has come in at 19,626 crore for Q4. We were penciling in a number of around 18,000 crore, so it's gone up, or rather it's higher by around 10% or so. So that's one piece which is quite impressive. Value of new business, though, has also shot up much better than anticipated. It's come in at 1,511 crore for Q4 versus the 1,100 crore odd number we were working with. And it's a solid 68% jump on a year-on-year basis. VNB margins have come in at 27.6%, largely in line with what the street was penciling in. And what we're also seeing is that the standalone PAT is at 359 crore versus the 358 crore number same time last year. So no changes there. But with regard to what is really leading the gross or the premium income higher as well as the new business higher is on the back of the fact that those tax changes have come through, and for higher value 5 lakh plus policies there was a limit of up to 31st March where it would have been non-taxable, and that's what's really leading the tailwind for HDFC Life, it seems. But solid set on the premium income growth, steady set on the VNB margins is how I would put it.
Okay, Harsh, that is HDFC Life, but what about SBI Life? Give us an update on that as well.
Right, so SBI Life's gross premium income has come in at 20,000 crore. We were working with a number of around 21,500 crore, so slightly short on that front. But the new business premium number has come in exactly in line with our estimates. We are expecting 1450 crore. It's come in at 1440 crore. In fact, the margins have actually come in better than what we had penciled in or what our poll indicated. Margins have come in at 30.1%. This is full year FY23 margins versus the number we were working with was 29.1%. So we've seen a 4.2% uptick in terms of margins for full year FY23 versus full year FY22. So that's one positive that I would take out of the result. Profit after tax has come in at 775 odd crore versus 672 crore same time last year, which is a 16% jump, and PAT has also come in slightly lower than our 830 crore estimate. Let's look at the full year numbers, a couple of them at least. The 13-month persistency has come in at 85.5% versus 85.2% on a year-on-year basis. The 61-month persistency has also improved quite solidly. 55.6% is where that number is at versus the 49.5% number same time last year. Let's also largely, it looks like an inline set of numbers, slightly lower on the gross written premium but largely better on the margin front.
And then, well, let's go across and listen into what the management had to say on their Q4 earnings report.
Numbers are the direct outcome of the scale, quality and spread of SBI Life business across the regions and the fundamental requirement of maintaining high quality, consistent and sustainable business model. The company gained private market share by 92 basis points to 24.3%. On individual rated new business premium, we stand at 152.2 billion with a growth of 18% over the previous year, while maintaining our leadership position with private market share of 22.3%. Group new business premium stands at 86.8 billion with a share of 29% in new business premium. We have collected total new business premium of 295.9 billion, registering private market share of 21.3%. That renewable endeavor to maintain our leadership position and continue to further increase our market share by offering products that meet the evolving needs of our customers. With our widespread, robust distribution network, complemented by digital technology, our innovation strength and above all, our people power.
All right, then we also have my colleague Vamakshi is joining us with all the nifty brokerages. Over to you, Vamakshi.
Well, absolutely. Let's first start off with HDFC Life. We have a report that came in from Morgan Stanley, and they've highlighted that the Q4 performance of the company underscored HDFC Life's growth DNA as well as execution. Now, HDFC Bank's stake increased to over 50% could remove a technical overhang for the stock, and in fact, they're expecting this could result in structural business gains for the company. The company's valuation has also derated significantly in recent years to attractive levels. So, given all those factors, Morgan Stanley has actually maintained an overweight on HDFC Life and given a target price of 700 per share. The next stock on our radar is Maruti Suzuki. JP Morgan has come out with a report, and they believe that the company's reports were broadly in line with what the street was largely expecting. The management sounded cautious on semiconductor availability, but they remained quite confident as far as the SUV market share is concerned. So a bit of a positive, bit of a negative, and on the back of that, JP Morgan has maintained a neutral stance on Maruti Suzuki with a target price of 8,800 per share. And lastly, watch out for SBI Life. Goldman Sachs believes that the company posted a robust VNB growth, and in fact this robust VNB growth has been maintained. The company has also come out with a very strong guidance for FY24, and given all those factors, Goldman Sachs has maintained a buy on SBI Life. In fact, the stock is in their conviction list, and the target price for this counter is 1,510 per share.
Okay, Vamakshi, thank you so much for that. But on to an exclusive. Sources tell ET now that Hinduja Group is leading the race for acquiring Reliance Capital. Company likely to have submitted a 9,600 crore bid. Let's go across to my colleague Ankur, who's joining in with us to give us more details on this. Ankur?
Yes, in an interesting turn of developments for resolution of Reliance Capital, sources have indicated that Hinduja Group is likely to be leading the race for acquiring Reliance Capital. Sources have informed us that Hinduja Group has placed a bid of around rupees 9,640 crore for acquiring the company. Remember, a fresh round of auction was conducted by the lenders, and that happened on Wednesday, and in that only Hinduja Group has placed a bid of over rupees 9,600 crore. The base bid by the lenders was kept at rupees 9,500 crore for this round, and other bidders such as Torrent and Oaktree Capital has skipped this round as far as the bidding is concerned. That is what sources have informed us. Now it will be interesting to see whether or not lenders declare Hinduja Group as H1 bidder, because a due diligence will be conducted after this, and a separate case is already pending in Supreme Court in which Torrent has filed an application in the topmost court. So all in all, for now it looks like that Hinduja might be leading the race for acquiring the Reliance Capital. However, the legal hurdles still continue.
Well, with that, it's time for a quick breather. Don't go anywhere. After the break, we get you all the stock-specific action. Welcome back. Here watching Market Cafe, and it is that time of the show where we get to you all the stock-specific news. And we have my colleague Ashesha waiting there to give you all the lowdown on the stocks that you need to keep on your radar in today's trading session. Over to you, Ashesha. What are the stocks that we need to keep an eye out for?
Hi, good morning. So L&T Tech will be the first one in focus. Numbers largely in line with what the street was working with. FY24 guidance is also very positive, and management commentary is also very optimistic. As far as fourth quarter numbers are concerned, company has reported constant currency growth of about 2% on a sequential basis. Revenues for the quarter gone by stood at 2,100 crores, which is an uptick of 2.3% on a sequential basis. As I mentioned, FY24 guidance is very strong. They've said that FY24 constant currency growth could be over 20% versus 13% growth that the company had reported in FY23. As far as consolidated margins are concerned, they could come in at about 17%. A good set of numbers is why this particular counter will be in focus today. RVNL, the next counter in focus, and that is because Finance Ministry has approved upgradation of the status of the company to Navratna CPECs, and on the back of this news that has come in, RVNL, remember, has in any case been in focus for the last many trading sessions. Today also it will continue to be in focus. Moving on to HG Infra, then an order win coming their way. The company has informed the exchanges that they won an order worth about 925 odd crores. Welspun India and Wipro will also be in focus. Wipro, of course, will be reporting its numbers, and both of these counters will be considering buyback in the board of directors meeting that is scheduled to happen today. Let's also talk about Gujarat Gas then, where the company has gone ahead and cut prices in Morbi region by about 5 rupees per SCM. So on the back of this price cut that has come in, Gujarat Gas will also be in focus today. So on the back of these news flows, keep an eye out on all of these counters.
Okay, Ashesha, you did touch upon Gujarat Gas, but let's go across to Somit for the more details on Gujarat Gas. What is happening in terms of second round of price cuts there?
Well, if you see, Gujarat Gas has cut the prices for the Morbi region specifically by around 5 rupees per SCM, and this price cut will be effective from the 1st of May. Now, for the effective price for the 3-month contract would stand at close to 39.5, and for the 1-month contract it would stand at close to 40.5 rupees per SCM. Now, do remember this is the second price cut in the last 1 month taken by the company. The earlier price cut was around 3.5 rupees, and for the non-Morbi region that contributes nearly 2 MMSCMD of volumes, the prices continue to remain steady at close to 48 rupees per SCM. Always the prices for non-Morbi has been at a premium when compared to Morbi. Now, what does this price cut mean for Gujarat Gas? Now, this clearly shows that the management is prioritizing volumes over margins. Now, in 2022, the management did prioritize margins over volumes, and because of this, there was a 70% cut or a drop in the volumes that we had seen from around 7.3 MMSCMD of volumes that the company used to do on a quarterly basis. It came down to close to 2 MMSCMD because the company company was prioritizing margins over volumes. Now, given the fact that they have changed their strategy now, the margins could take an impact. Now, according to analysts, at current prices, Gujarat Gas might be earning a margin of close to rupees 1 to rupees 3 per SCM. That is, this is the gross margin as against 12 to 13 rupees what the company did previously. So we can see a clear sharp drop in the gross margins coming in for the company. Now, this price cut has also been done because globally propane prices have been lower, and to compete with propane, this price cut has been announced by Gujarat Gas. Now, in the last couple of months, propane prices have dropped by nearly 30%. To around $560 per metric ton. So what to watch out for? Now, the key thing to watch out here is how the Q4 volume and margins come for Gujarat Gas, and what is the management commentary coming in on the current volume trends and current margin trends and the strategy going forward. So keep an eye out for Gujarat Gas. The earnings would be key thing to watch out for. The dates are yet to be announced.
Somit, I'll request you to stay back because you have all the numbers for Indus Towers as well that reported its quarter numbers, and we believe that the company has reported a profit as against a loss on a sequential basis.
Well, on a sequential basis, obviously, it's a strong set of numbers because in the previous quarter, the company had to provide for some non-receivables or delayed receivables from Vodafone Idea. So the numbers are actually not comparable. But even if you see, the EBITDA has come in at close to 3,433 crore rupees, which is pretty much in line with what the street was expecting. The net profit is close to around 1,400 crore rupees. However, key things to watch out for from this result, or key pointers that we need to keep an eye out for, is the fact that the tenancy addition is the highest in the last 6 quarters. In the fourth quarter, it stood at close to 3,400 tenants, and this is because of the 4G rollout that Airtel has been doing in the rural areas, which has added to this. However, the tenancy ratio has declined on a sequential basis. It has come down to 1.78, which means that incrementally, whichever tenants are coming, it's on single tower basis, which means that the contribution to the EBITDA would be on the lower side and not much. Now, also one important thing to watch out for from this result is the fact that the company's receivables on a sequential basis have come down, which means that Vodafone Idea has made entire payment for the fourth quarter of FY23, and it could have also made some payments toward its previous dues as well. However, on the negative side, the company has not announced any dividend for the financial year 2023. Now, do remember, Indus Towers is a dividend play stock, and company not announcing any dividend for the full financial year could be taken negatively by investors. Also, the company's energy margins continue to be in the negative side in the fourth quarter of FY23 as well.
Okay, Soumya, thank you so much for those details and breakdown on Indus Towers numbers. But let's move on and talk about earnings that are expected today. We have HUL that will be reporting its numbers. When you look at it in terms of the revenue growth, we're expecting a 14% growth in terms of revenue. Volume growth will be around 5% is what we're expecting. Profits of the company expected to see a 12% growth, while EBITDA margins expected to be flattish at 24%. Let's not forget that additional royalty to parent Unilever has actually kicked in from Feb 23. So that's the impact that comes in on the EBITDA margin front as well. Also, not to forget and note that, company has taken price cuts in terms of soaps, detergents, and this is mainly coming in after we've seen commodity prices declining. We'll wait for a commentary coming in from the management on what is the current on-ground situation in terms of the commodity prices. Is it likely that there will be more price cuts across other segments as well? How is it looking like in terms of inflation is a key factor to watch out for. Food and refreshment segment, now that is actually expected to see a moderate growth as there was high milk prices is something that continues to impact most of the companies. But in terms of the home care as well as the beauty and personal care segment, we're expecting a decent double-digit growth over there in both these segments as well. Sequential improvement is what we're expecting in terms of the margins because obviously inflation has come down on a sequential basis, but let's keep an eye out on that one as well. Factors to watch out for: demand and margin outlook, any commentary in terms of the nutrition business, competitive landscape over there, urban versus rural growth, the rural growth trajectory, how is that shaping up, are key factors that we're keeping an eye out on.
All right, then with that, it's time to wind down on the show. Don't go anywhere, the markets will take the action forward. Thank you so much for tuning in.